Hello and welcome to the live trading hour brought to you by the Live Trade Room. What we look to do during this session is we prepare to trade the cash open for the US markets, which is at 1 o'clock UK time. So we'll put our preparation together. We'll discuss our trade plan. We'll go through some of our open positions. We'll look for the best possible opportunities for the session ahead, and then obviously within the time frame that we're broadcasting, we'll be trading live and looking to position, perhaps mitigate risk on trades, book in profit, whatever the case may be. So it's a whole trading experience. So without further ado, if we could just start with our risk warning. Please take a brief moment to familiarize yourself with our risk warning currently up on screen. I can see our camera going in and out a little bit, which is a bit strange. I'm not sure what. Might have to check that in a bit. So yeah, of course, take note of the risks involved in trading these financial markets. I'm sure you're probably aware, but without risk, there's no opportunity for reward. But it's just as important as the reward side of things. So most traders, especially when they enter this environment, they only think about the reward. They only think about how much money they're looking to make, and they'll never sort of give a second thought to, right, well, how much capital am I actually putting on the line? And that's really what we want to teach traders, to embrace risk and not to, be scared of it or, pretend it doesn't exist or anything like that. So it's just about embracing risk and putting sort of fairly straightforward steps in place to mitigate, potential, significant downside. Okay, so first things first, let's have a look at the news. So today, now Wednesday, the 2nd of June. So we had a better than expected GDP figure, as quarterly figure coming out for the Australian dollar. And ultimately, we've seen a little bit of, last time I checked, a little bit of negative price action, across the board. So we're seeing the dollar actually strengthen over the course of today's trading so far. So we go into those dollar pairs in just a moment. It's a bank holiday in Italy, so we don't have Italian financial institutions engaging with these markets. just as a point of reference, really. And as we can see for the afternoon, we've really got very little to work with. So some of these events are very unlikely to impact the global markets, which is why they're classified as lower risk events. What we're gearing up to, and what you're hearing probably a little bit, in the news, is a little bit more on the employment situation in the US. So tomorrow we have ADP non-farm payroll numbers and the unemployment claims, and on Friday we've got the big one, which is the non-farm payroll. We'll discuss this a little bit more detail probably tomorrow in the build up to this event, certainly on Friday, because last time we had a very, very disappointing number. We're expecting about 1 million jobs to be added. We saw 266, and it just shows you how far off those that are the economists that agree these numbers with consensus, how badly wrong they can get it. So we'll have a look at that news event. So really not an awful lot to impact markets really to any great extent. Just commenting on the bond markets. They're not really doing an awful lot either. We've been around this sort of 160 level for quite some time. This sort of price is probably the average price really in the last 3 months. So little upside, a couple of sort of significant pullbacks, but generally around that sort of 160 level, with further upside expected, you see. So let's see when that starts to kick in, and this Friday's jobs number could be the catalyst for the next series of moves. Okay, so let's discuss then last night's trade plan really, which was very limited, to be fair. We were looking at the S&P. If I share just our thinking on this trade, is there's like a 1, 2, 3 day low just gathering around that, just below that 4,200 level. So at the 41.93 level, and last night we saw a really strong rejection of these highs for the S&P 500. If I just get up our pen there on screen, so I can kind of talk you through it, and hopefully I won't scribble too much. Okay, so where are you? Come here. Right, there we go. My mouse went a little bit rogue there for a second. So what we can generally sort of assess, and we always talk about market conditions, and over the last 3, 6, 7 days, this market has generally been moving sideways. Yesterday we had a bit of a false breakout to the upside, and now we're looking for potentially the flush trade to the downside. As you can see, it's been quite resilient. This level up here is an all-time high, so we are within 45 points of all-time high prices in the S&P 500. So this is nothing but a pause. The markets are probably waiting for the next stimulus in these markets, the next fundamental driver in these markets, and that's probably going to be US jobs number, because it'll tell us a little bit about the inflation story. If more people have jobs, they'll have more money in their pocket, they'll be spending more, prices are then likely to go up. That'll impact the bond markets, that'll impact the stock markets, that'll impact the dollar, and all of a sudden you have a succession of kind of moves. And at the moment, a lot of these markets, especially with a lot of the dollar pairs, they're all kind of in what we would regard now as sort of fairly long-term sideways moving patterns. And you can see that across the dollar pairs, and we're talking about the major pairs here. So let me show you again, I'll just do a few of these just so that you get to understand the market conditions. They are sideways moving. They're what we call consolidating markets. You could argue that there is consolidation in something like the dollar yen, but with a sort of a mild sort of bullish biasness to it. So we're still seeing higher highs and we're still seeing higher lows in these markets. So this is one of the markets we were getting into this morning as well. This little impulsive move to the upside. Yesterday we had the pullback, we had the indecision. Today we've opened up and now we've broken above the daily high. So we use daily highs quite a lot to navigate, to get in and out of these markets, to remain disciplined. They're support and resistance levels in their own right, but they allow us to be objective with our decision making. That's the major reason for using these daily highs and daily lows. So when we get a break of this, and the trade idea kind of fits with our overall view, then we can pull the trigger with a higher degree of confidence, perhaps. So the dollar yen, it's probably the better performing markets, but you can see the general state of play. Most markets for the dollar are drifting sideways. And if I just share the daily time frames with you, so the dollar CAD has been in this sideways zone for a lot longer than perhaps some of these other markets. Now there is some really good news to consolidation. I'm tempted to kind of throw it out there. Would any of you currently online suggest what the benefits of consolidation are? Yes, very, very boring, lack of opportunity throughout that period, but it's what happens after consolidation, which is what is really interesting for traders. Certainly breakout traders like ourselves. So I'm just wrapping up the dollar. I'm just basically, showing you guys that if you wonder why we're not so active in the dollar, it's because we're in this sideways zone. This period of consolidation. Just finishing off here with the New Zealand dollar. We're in this sideways pattern, as I've just explained now, across all major markets. You can even look at some additional markets, the currency markets a little bit more generally. We're kind of in this fairly narrow range for the euro pound as well. So and these are the most volatile markets out there. Now the yen markets are in a slightly different position because we're actually in the three yen pairs. We're in the dollar yen to the upside, we're in the pound yen to the upside, and we're in the euro yen to the upside. So we're not really trading these yen pairs because of the strength in the dollar, the pound, and the euro. It's more to do with the fact that the yen is one of the weaker markets. Even looking at the euro yen, we're in this uptrend, as you can see. So prices are moving from bottom left to top right. So we're clearly looking to trade this market in the correct direction if we're looking to go with the market, which is generally what we do. But you can see the last 4 days it's just been drifting sideways. So that is still the market condition. And what was interesting last week with the pound dollar, and this is probably a good example to kind of share with you our thoughts on consolidation, is that all trends start with consolidation. So when you get prolonged periods of sideways moving price action, there is your high probability buy trade. Yes, we are experiencing a pullback, it's how these markets move. They never move in a linear fashion like this from point A to point B. What you generally experience is markets that kind of move in that fashion. So that's more of a normal market condition. So to capitalize on this move, you have to be prepared, if you do your analysis right, to give the market the opportunity to pull back. You want to see natural pullbacks because it almost feeds the move to the upside. If it was just linear, you'd find it difficult to find liquidity up at those higher levels. So you get the sell-off, and then you get the next leg to the upside, you get another sell-off and get the next leg up. And quite often these levels, they produce support and resistance in their own right. And that's generally how people, certainly technical traders trade these markets. So we've had the explosive move, a one-day move to the upside. We were able to get into it. We've had to sort of put up with the pullback. This is where sort of technical stop losses come in quite handy. And now we're looking for these monthly highs to be broken and for this market to hopefully continue higher. Our same view is for the euro yen. We had quite a strong euro yen today, and that's subsequently rolled back over to the downside. So a couple of question marks really over these yen pairs, but they're clearly taking a little bit of a pause, like we're seeing in many of these markets at the moment. The consolidation is not just the currency markets, also we've got 5-6 days now of sideways moving patterns between the 1909 and the 1890. So we're just really talking about a $20 range, which is nothing in a market like this. So that's what we're seeing. So again, the breakout above the 1910 to the upside, or a breakout below the 1890 to the downside, are potentially decent quality trades to the downside. And just looking at the commodity, the oil market. So this was a trade we got into yesterday. I don't know if any of you were with us yesterday, but the one thing we were concerned about is the snapback trade. So we used our entry was a breakout of this level. We had one technical stop loss here. We had another one down at these levels. We decided to take to work with the one that gave us the largest stop loss. It was a $1 stop loss, and then we got this sort of question mark price action here, and then the flush to the downside, and that's what we were concerned about off the back of OPEC. And unfortunately, we just got tapped out at this bottom level. It was a 1% trade, so we always control our exposure, and we're comfortable with the exposure at the point of entry. But then, of course, what happens? You end up getting that move. So our bias is, and it's always been to the upside for these markets, but there was a bit of stop loss hunting yesterday. Like you'd hope, you would have bounced off the monthly high, which is this level in here, but it just poked its head below that level. So we have 2 times the spread rule for that purpose, to kind of give us this little buffer. On this occasion, we just got sort of taken out at the very, very lowest price in that. And now, of course, the market is continuing to move to the upside. So the opportunity still exists to the upside for crude oil. And sometimes we do need to get into something, maybe 2 or even 3 times to get to see the profit on it. But we do have indice markets that are, and again, it's really a product of consolidation. And the big breakout is to the high, is to the upside and to the downside. We're not really seeing either just yet. The Nasdaq moving sideways, the Dow Jones moving sideways up at these highs for the last week. We're currently above these levels, but there's your kind of your consolidation level. You could probably extend down to these levels down here, giving a better picture of it. And it's looking like there's this bullish aspect to these trades, but they keep failing at these heights. So again, we've just got a bit of a question mark. We want to see these prices close, above the 70-90 level, and they always struggle and fail to do so. So one of the pillars in which we trade is really about patience, and these are one of these market conditions which we need to be patient. We would have liked this to the upside yesterday, but then we just get a false breakout to the upside. So, and we're broadly kind of trading within this little zone here. So we have more question marks with these markets than answers at the moment. If you look at the pattern of the Nikkei, we're looking for a selling opportunity in this market. It's creating lower highs and potentially lower lows, even though this is not quite technically a lower low, but there is this little downward pressure on this market as a result. So we're looking at this high in here. This is a strong level of support and resistance in its own right. If I just clear that out, we might be able to see it a little bit better. This kind of zone in here, we can see prices rejected off the highs, and we can see prices bouncing off the lows on multiple occasions. So depending which direction this market's coming from, until we get the breakout to the downside, which is what we see there, we create a low and then we pull back into this little zone in here. So will this give us that next leg to the downside? That's what we're looking for. It's just today it's not giving us that opportunity. So you know, a lot of these markets can still go in either direction. Bitcoin, again, it's kind of following suit. We're in this little sideways pattern, and like I said, there's the good thing about consolidation is all trends start with consolidation. So you see, the thing is with Bitcoin, people are convinced this market's flying to the upside. For us, it very well may fly to the upside, but it could equally fly to the downside. So it's almost a toss of the coin, which is why technical traders can benefit, because for us, you know, we won't need to get into the, I believe Bitcoin will be at 100 grand by Christmas time. It could equally be at 10 grand at Christmas time. So we don't need to be trading the market with beliefs. That doesn't really get us anywhere. But what we can do is technically we can look for buying opportunities above like 41,000 and potentially selling opportunities below that 30,000 level. So while it's in this little zone, we can allow it to play itself out. And I suppose this is the nature of support and resistance traders. So very volatile market. Like I said, could easily be back up to 60,000 in a few days. Could equally be down at 10,000 as well. So that's the risk you take with a very, very speculative, volatile market like Bitcoin. Okay, so the euro dollar then. So all of these markets are kind of in this little sideways pattern, and it doesn't help us with direction. We're going to look for further dollar strength and see which markets can potentially give us the better opportunities to the upside. So we'll have a look at the yen pairs. We'll have a look at the yen pairs. We can have a look at gold. We can have a look at crude oil and the S&P. Okay, so let's get these pairs up on screen then. So dollar yen, euro yen, pound yen. I tell you what we shall do. Let's put the big one on the left hand side. We'll put the pound yen in the middle, and let's put the euro yen on the right hand side here. So we can see all three clearly on the daily time frame. There's a strong level of support in here, so maybe there might be an opportunity for a buying opportunity in the euro yen. So let's have a look at gold. the crude oil market, although that's in a and let's have a look at the S&P as well. So we're just at the US Open right now. We're currently in the dollar yen trade to the upside, the pound yen to the upside, and the euro yen to the upside. Now it's a case of just looking for additional opportunities here. So let's have another look at crude oil. So let's do a little bit more analysis on this market. So we've clearly been in a bit of an uptrend. We've had a really strong rejection to the downside. We've made a low at the 67.35 level, and we started to see just prices, look like they're edging higher. We've got three what are called structural failure trades to the upside. This is your first one, this is your second one, this is your third one, and we're just hanging around like we did back here. We're just hanging around this little sideways little zone. Yesterday we had OPEC, and they're looking to just slowly taper their supply cuts over the course of this year. So basically as per expectations. So that's what we can expect. The OPEC Plus are kind of very upbeat and positive about the demand for crude oil. So it's trying to increase the supply to match demand, which will then push prices higher. So they're anticipating that prices are likely to continue to the upside because the demand outlook with these economies coming back online is looking still quite positive. So what we can do, we can look to get into this again. Just the fact that we took a small losing trade yesterday does not deter us from looking to get into trades on multiple occasions. And we just take note of the high up here. So we've got a little bit of a range forming here. If it could pull back in and around this $68 level, then that's probably technically the better opportunity. If it could pull back to that level, we can maybe get in on a bit of a pullback trade to the upside. We do have this narrow little zone in here, so there is a breakout trade. There's a pullback trade, but it would need to be around the $68 level, but a break above the 68.39 is your breakout trade. And then you've got a technical stop loss back here again, or you could probably go with something a little bit higher on this occasion. So that can be loosely our trade plan really for crude oil. So there's an opportunity above 68.39. Yesterday we were looking above 68.32. So virtually the same trade as yesterday. Just put a new level in there, 39. So that's a breakout trade. Okay, we can see a bit of price action coming back into the pound yen. The gold market and the S&P are not really doing an awful lot just yet. Let's see what's going on in the pound yen, because that's looking like we're seeing a bit of an uptick in the pound. Okay, so here we go. We're getting this little breakout trade for the pound yen. So if I just zoom out a little bit, we had a consolidation just in here. We had our really massive breakout trade. We've had our kind of pullback, which you would expect, and now it looks like we're going to get that next leg to the upside. So our overall bias in this market is higher for that reason, and we're already in this trade to the upside. We just got in at a much lower price there a few days ago, and it looks like we're edging close to the 155.31 level. So there is a breakout buy trade above 155.31. 55.31. So we're quite close to that level. For those of you that want to have a look at a market like the pound yen, it's a viable trade to the upside. We're seeing gold look like it's. Don't forget, gold is a hedge against inflation as well. So we're just seeing this market break out above this level, just sitting in here. You know, sideways moving price action. As you can see, we're now just getting this little breakout to the upside above this level, just sitting in here. Does that fit in with the overall trend of the market? Yes, it does. So there's your high probability buy trade. You can look to get in to see if we can push the prices higher in gold. So this is a high probability breakout buy trade above the 1903 level. 1903. So this is on a 15-minute time frame now. So this market closes in about 2 minutes time. So we'll see what sort of close we get. We want it to close above the 1903. If that's the case, we can prepare to get into it. We'll just get our accounts ready while we're waiting. So we do look at multi-asset classes, just so that you're aware. So we want to understand, I guess, what's going on across correlated markets. So from a lot of what goes on in the indices markets impacts like the dollar and crude oil and gold in terms of the flow of capital. So if the equity markets push higher, that means we're risk on. It means traders and investors have more of an appetite for risk. And where do you get risk in these financial markets? It's from, well, your equity markets are your risk on markets. And nowadays people are getting an awful lot of crazy risk from cryptocurrencies, but that's a very different investment vehicle, so you need to really take that on board. I'm just looking at crude oil and it's just softening a little bit. See the pound yen failing to close above that 50 31 level. Gold is kind of pulling back to that 1903. So we're interested in the flow of capital. So we want to know, where does capital move to? If it comes out of risk, where does it go? It finds a safe haven. It finds somewhere safe to go. It could turn to cash. It could turn to the yen pairs. It could turn to the US dollar. Has been it's been able to offset risk, certainly since the COVID situation. So if people hold dollars, then they feel a little bit more comfortable than perhaps putting their cash into other areas of the market. So we want to see the flow of capital, and sometimes over the last few weeks we've seen money come out of equities, and we've not seen it go into where we would normally see it, like your safe havens. Instead, what we've seen is the gold push higher as a hedge against inflation, and we've seen the stock markets, be very close to all-time highs yet again. So we do have a very strange market condition. I'm just looking at the close. The gold close is just closing at the 1903 level. Okay, so what we could do is we can prepare to get into the gold trade. I'll just put it on big screen so you've got a little bit of an overview. So we've got a decent period of consolidation in this market. So the market conditions from yesterday, from the first, what day? Sorry, it's the 2nd of June today. So for 24 hours now, we're pretty much moving sideways in this market, and now we're beginning to turn around, and it's looking now more bearish. And our overall, if you look at this market on any major time frame, it's pushing higher. As you can see, it's really bouncing out of this long-term pullback, and now we're extending to the upside with significant volatility. There's last month's bullish price action in gold, and now we are looking to trade some continuation above those levels. So there's the opportunity for you. So we've got the close above the 1903. We have a bit of a formula that we apply to these trades. For support and resistance traders, you look at previous lows. So what we can deduce from that is that this is a strong level of support if prices are coming from above until you get the breakthrough, and resistance if prices come from below. So that's generally how traders trade support and resistance, if that makes sense. So at the moment we're looking for a resistance. Will this market break through to the upside? Because that's what we're looking for. We're looking for the breakout trade. We're not looking for, that's how we describe it. This is consolidation. We're looking for the breakout trade above consolidation. And at the moment we're not really getting the opportunity. We've got a little spike above, but this is on a 15-minute time frame. The same situation, we've got a bit of a rejection at the highs in the pound yen. So we were hoping for this market to close above 155.31, and we've just poked above it, and it's kind of reversed. So now we need to be patient and just wait for that close above that level. If we get it, we're in. If we don't get it, if we get that close above 155.31, there's another opportunity to buy the pound yen. We're already in the trade. We've been in it for a few days. We're also in the euro yen, so we're quite sort of yen weakness, quite heavy when it comes to yen weakness, and we've had to put up with a few day pullback, but now it's looking like we're continuing to the upside again. The euro yen's not quite supportive. This is quite a strong rejection to the upside, but let's see if this market can rally. Gold looks like we're attempting to push to the upside, so we can look to get into the gold trade if prices break above that 1904 level. Let's see what a sort of stop loss we need on this market. Okay, so we're just getting that move now. So okay, so we're looking at about 1,000 pip move for gold if you're going to use this technical low. So just make sure you calculate the trade size properly. So on the bigger time frames, we're looking to buy the pullback. So we don't want to get distracted from, you know, the bigger picture in this market, which is a market that continues to grind higher. Yesterday we saw a strong rejection of the highs and a bit of a pullback, and now this market is picking up a little bit of pace to the upside. But while this market is really struggling to kind of get above that 1903 level, we want to exercise a bit of patience and not be too hasty, because the reason being, this level in here is pure consolidation. So unless we break above that level, we can probably expect more sideways moving price action, if this makes sense. So that's what we would expect. What can change that analysis is that it's if we break above, you know, this little range just sitting in here. And at the moment, it's kind of struggling to do that. But we'll, you know, an awful lot of trading is kind of, especially day trading. We also trade daily time frames every evening at 9:45 p.m. UK time. For those that perhaps don't have the time to day trade during the day, because it can be a bit time consuming. If you trade daily time frames, you know, you're only really committing about 15-20 minutes every evening at the close of the markets. For more information, there's the link below in the description, so you can have a look at that if time is an issue for you. There is different ways to trade these markets, but for day traders, there's no substitute for being patient. You know, that timing to pull the trigger is really, really important. We can see that the pound yen is making this little move to the upside again. This would be a breakout to the upside. got markets just bouncing off these highs. Let's just have a quick look at the S&P. We're in really quite tight consolidation in here, so you just wonder how accurate you have to be with markets like this. You don't really get much change out of some of your decision making. You know, we're in this little zone here, so when we look at price action like this, when we're bouncing from 42.19 to 41.82, so less than $40 or 40 points range since the 25th, is it 24th of May. So that's a long time of just sideways moving price action with nothing really happening. And this is why sort of being realistic as a trader, if you can see a range like this, which is like 37 points over the last week and a half, you know, if you get into either a buy or sell, if you've got a 70 point return on the trade, it's looking quite doubtful because the range for such a long period is only sort of 37. So this is why trading conditions like this only really suit scalpers that are looking to get maybe like a 5-point winner or something, you know, but they'd have to be in and out of this trade quite a lot. And that just exposes more capital more quicker. So every strategy has its pros and cons. It has its upside and downside. But this range is just too tight. We actually want the breakout trade. Sorry, this is the Euro Yen. We'd actually be looking for the breakout trade on the daily time frame, for example. That would look like it would make a little bit more sense for us. So what that looks like is either a confirmed break to the upside above that level 42.19 or below the 41.82. So while we're in this period, we can be a little bit patient, even though short term you'd expect further upside, but you're gonna run into sellers at some point. And you know, can you mitigate risk and book in profit before that point arrives? That's the question. Okay, so the S&P is looking a little bit bullish, but like I said, we're in this very, very tight little range on the daily time frames. So gold market is now looking like we're extending the move. Friday's non-farm payroll is coming into view for these markets, so a positive jobs number is likely to put more money in people's pockets. If people have more money, then prices, there's more competition for products and services, prices are likely to go up. That feeds into the Fed's concern about these markets, is that they're saying there isn't that much inflation, and if there is, it'll be transitory for a prolonged period. We have a bit of a question mark over that analysis in its own right. So now we're getting this little move to the upside. We've got this market closing now in just a minute or two. So we might look to get into this trade, and then we might let you guys go. We have another trading session as well just after this live free broadcast. So please feel free to subscribe to this channel. You'll be notified when we go live. We're live every day at 12:30, so we hope you can join us for it completely free of charge. Give us thumbs up as well if you can. That would be great. We're just going to close out this trade now. this little candlestick. The crude oil is pulling back. There might be an opportunity to get into this around the $68 level. That's worth keeping an eye out for. And the pound yen is looking like we're going to accelerate higher. See, we don't want to lose sight of the fact that we are pretty much in this little sideways zone like we'd been in previous zones before it. So the bias is still to the upside. So this market, this candlestick should close now. On the 15-minute. Okay. So we've now got to close above that level of resistance, so we can we need to be able to calculate it's the 18 1893. Okay, you'll see the gold trade in just a second. We take trades on multiple accounts, I'm afraid, so okay, so currently up on screen then, we've just got into the gold trade. So what we wanted to make sure is, if I just zoom out a little bit more, this is a clearly defined level of support and resistance here. And what we wanted to do is to get into this trade above this level of resistance, and that's what's happened. And now we've got enough to get into that trade. We had been previously at a high. This is just a pullback off the high, and now we're drifting sideways, and now we're looking for that next leg to the upside, and hopefully we'll get that off the break of this level in here, and that's the confirmation we now have. So we need to give this a little bit of time. Of course, pullbacks are just commonplace in these markets. So if it kicks on or if it pulls back, it's all part of the normal process. Hopefully we'll run into some support because we've got a technical stop loss and we'll see if we can ride this trade to the upside. So hopefully it'll be a good trade. It's looking positive on the daily time frame. That's the other thing, is we look to generally go in the direction in which the market is trading, which is to the upside. So very rarely, unless there's a specific reason, would you see us looking to sell the highs, for example, on a daily bullish candlestick. So little things like that can really make a huge difference. It keeps you on the right side of the volatility and the momentum, and that can be enough for some traders to actually, you know, turn a corner. So let's keep an eye on this. We're hopeful to be pushing up to new highs, and let's see if now's the time for that move or not. Okay, so pound yen, similar situation. We're now above that 155.31, so we'd expect further upside with the pound yen. You could potentially look at it maybe on the 5-minute chart, and just if you get that confirmed close above that level, then it might be a viable trade. The S&P looks like we're kind of in a very mild risk on market condition. We'd expect the yen to continue its weakness. It's continuing its weakness against the pound, against the dollar, not so much against the euro. So let's see if we get further upside. We're into the gold to the upside. We have a technical stop loss below today's daily low. And crude oil, we might get a little bit of a pullback trade shortly on that. So let's see how we get on with these markets. They're largely consolidating, so we need to keep a kind of an open mind on some of these markets and keep checking and keep monitoring what's happening. And as long as these markets are moving in the direction which you want them to move, then that's great. It's in keeping with your plan. And if not, you can make decisions accordingly. So look, we do need to wrap it up there, guys. If there's any questions, feel free to post them into the chat box. Do subscribe to this channel. We'll be live every day at 12:30, so hopefully you can join us for that. And we do have a procession of videos and market updates and things like that, which you might find quite useful. They're only just small little videos with updates. There's a viable trade here right now in the pound yen, which we're already in to the upside. So hopefully we get a nice move in that market as well. Okay, so on that note, have a lovely evening. Give us thumbs up. You know, look at our website if you've got any questions about trading these financial markets, and if we can help in any way, we'd like to do so. We do charge our traders just a small monthly fee to get access to a wealth of products and services, all there up on screen for you. Daily mentorship, profitable signal service, daily live trade rooms. We've got over 50 hours of trading education as well, 4 different educational courses, and essential trading tools like risk management software and everything you really need. So all of that's there. Just go to our website, thelivetraderoom.com, for more information, and contact us as well through that if you need. We'd be happy to sort of explain things in a little bit more detail. So on that note, thanks very much for joining us. Do take care, and we'll see you tomorrow at 12:30. From everyone here, bye for now.